Hello everyone, and how's it going? I hope that you had an amazing day and a very profitable time in the market despite the ongoing uncertainties. If things are challenging, just remember that good trades, just like the very bad ones, will always go away. As you have seen by now on the title and the thumbnail of the video, we're going to talk about something that is very important to investors like you and I: high growth opportunities for our invested capital. As the job market looks ever more uncertain in many parts of the world, and that the inflation has skyrocketed to historical peaks, many of us have been looking to enhance our own financial health and to be more resilient against uncertain external environments. In order to secure our own financial future, we need to find promising opportunities offering us amazing growth potentials, and Nasdaq in this regard has always been such a place with plenty of exciting opportunities to offer. Tesla is one of the biggest names navigating those exciting waters. One of the major advantages that we have been choosing more well-known companies in any given field is that they tend to be the first to react to macroeconomic announcements, as many see companies of such a scale to be representative of the market appetite for risk. Any up or downtick of the interest rates or new announcement regarding global supply chains, geopolitical events, and so on will have the market increase the volatilities of companies such as Tesla. In today's video, we will take a deep dive into Tesla and see if it's a good choice that would fit with your portfolio. Before today's video begins, if you like my content and would like to see more such stock analysis videos, please like, comment, and subscribe to my channel, and check out the playlists grouping different companies that I follow up. With that being said, let's jump into today's topic. In the dynamic world of stock market analysis, Tesla has recently been navigating a pretty complex landscape, presenting investors with both challenges and opportunities. The daily performance showcases a range of movements, with a daily high of $195.77 and a low of $190.87. Over the past 5 days, Tesla's trend has been notably bearish, rebounding from a bottom observed on January the 25th. This recent pattern may indicate a period of uncertainty and caution amongst investors, potentially affecting the short-term trading strategies. Zooming out to a 1-month perspective, the stock has experienced a decrease of 23%. A significant downward pressure was observed on January 24th, marking a key event influencing the stock's trajectory during this period. Investors should carefully consider the implication of such a decline. In other words, it really marks the tone of what's going to follow, and that even if right now the slope has slowed down, it doesn't mean that this overall tendency has necessarily bottomed and then will reverse in the short-term future. A broader view, covering the last 6 months, shows us that Tesla is currently positioned at the lower end of a bearish channel, reflecting an overall decline of 30%. This sustained trend over a more extended period of time suggests a persistent bearish sentiment surrounding the stock. For options trader, key strike prices to watch are $195 and $200. Understanding the relevance of options in trading stocks is crucial. Options provide investors with the right but not the obligation to buy or sell a stock at a predetermined strike price within a specified period. These financial instruments can then be used to hedge against potential losses or to speculate on future price movements. In the context of Tesla, options may play a vital role in managing risk and maximizing the returns. These strike prices of $195 and $200 indicate levels where significant market activity will be expected, potentially influencing the stock's direction. Analyzing the recent volume reveals that Tesla saw a trading volume of 105 million shares, slightly below the average volume of 112 million shares. Understanding the importance of volume in equity trading is fundamental. Volume represents the number of shares traded during a specific time frame, providing insights into market strength and the level of investor interest. Higher than average volume often signals strong conviction amongst market participants. On the contrary, lower volume may indicate a lack of consensus, potentially leading to increased volatility. Right now, I would say that it's on the softer side. People have some conviction that things will maintain the way they are, but it's relatively less than how things were in the past. Tesla's current position in the market remains at a high level, characterized by a sideways movement. This stability is attributed to the market's lack of clear direction. In the current marketplace, Tesla stands out as a significant player, reflecting both promise and challenges for retail investors. Examining the dynamics surrounding the electric vehicle giant provides valuable insights for those considering its inclusion into portfolios. The need for retail investors to identify high growth opportunities is a constant in the financial world. Tesla, with its dominance in the market share in this promising sector, aligns with this demand. The electrification of automotive industry represents a transformative shift, and Tesla's position as a frontrunner places it at the forefront of potential high returns for the investors. However, real investors face severe challenges, which may impact their ability to capitalize on these opportunities. The most common hurdles include a lack of time to conduct thorough research, limited technical knowledge required for in-depth analysis, and the overwhelming array of low-yield financial products offered by traditional institutions. Those challenges may hinder retail investors from making informed decisions and emphasizing the need for accessible and digestible information in the stock market. What makes Tesla attractive stems from its status as a dominant player in the EV sector. As the global push for sustainable and environmentally friendly transportation intensifies, Tesla's market share becomes increasingly valuable. The company's innovative technologies, commitment for green energy, and a charismatic leader, depends on your view, have contributed to its standing as a symbol of the electric revolution. Despite those positives, still there are many great challenges. One notable concern is the potential of Tesla's growth prospects to be already priced into the stock. High expectations can create a scenario where meeting or exceeding them becomes increasingly challenging, leading to potential disappointment for the investors. It is essential for retail investors to carefully assess the current valuation of Tesla and its future growth potential to make informed investment decisions. Another factor influencing the attractiveness of Tesla stock is the uncertain mood swings of its CEO, Elon Musk. Musk's tweets and public statements have been known to impact Tesla's stock price, creating a level of uncertainty for the investors. While Musk's vision and leadership have been integral to Tesla's success, his unpredictable behavior can often introduce an element of risk that we must consider. Navigating the challenges and attractions of Tesla stock requires a balanced approach. Retail investors should always leverage available resources to stay informed about the market trends, the potential risks, and the broader economic landscape. Seeking educational opportunities to enhance technical knowledge may empower us to make sound decisions aligned with the financial goals. So right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflation. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. So overall, my recommendation for Tesla is to start accumulating a position right now, given the weak price action of the shares. I believe that the current sell-off will continue on for some time before the bottom is truly reached. The long-term holding is the best alternative compared to short-term trading. The maximum capital allocation should be between 10 to 15% of the portfolio's capital.